Good morning, welcome to the morning review on Thursday the 19th of February. This is Kim Watson speaking for Easy Trader. Okay, looking at the euro-dollar first then, and yesterday evening at 7 o'clock the Fed minutes were released. These were particularly dovish, and there was lots of concern about the strength of the dollar, the potential effect of removing certain words and how the market may react to taking the word patient out, etc., and also worrying about what's waking up to the fact that the rest of the world was slowing down in terms of the economic growth. So it was all quite dovish, and we saw the euro make back gains or losses. It occurred during the day, so it left the euro on a sort of more positive. It's actually sitting there as a bit of a hanging man at the moment. The euro dollar still remains in a relatively tight range. You could actually draw a line across the top here now, and on this daily. In fact, I'll just do that. You've got this line sitting across here. So you've got this sort of wedge pattern that's still there, and it's actually more defined on the 4-hourly chart. There's a tighter wedge there. Now a break of the upside of that could well see us pushing back to, as I said yesterday, if we get any push, any real shove up here, we could end up back into the monthly pivot and maybe looking to take out the highs of the early part of the month there. All of this sort of rhetoric, etc., any decision and any agreement on Greece could see the euro fly, I think. So it'll be interesting over the next few days. Right. So if we can let's have a look at the hourly from here. I have got a downside target there of 13.82, which could be reached at some point, but we are getting quite extended away from that. It's not massively extended, it's still possible any sell-off, and it's quite difficult really in terms of looking at a shorter term trend, maybe looking across these sort of points here, but a sell-off this level could see us running towards that, but there's plenty of support on the way, so it's not an easy route back down, unless, the only thing that could drive that very quickly would be some negative comments coming out. Any rally, well, would take us up to previous days' highs. I'd be looking at those sort of high levels, and maybe this time it's already been up there a couple of times. Maybe push up even further. So the sustained rally could see us running up quite strongly there. Okay, looking at the pound dollar then. Again, yesterday pushed up, and it was much more positive. It's already slightly more positive anyway, and pushed up well yesterday in the evening. It's put this bullish pivot swing in on the dailies there. Break of yesterday's highs rather could see us running now towards that 100 MA. It's interesting how over a day or so how things change and the shape of the thing has changed, and what was looking quite bearish just a couple of days ago, or 3 days ago, 4 days ago, is now sort of once again looking quite relatively bullish. I do have a downside target, but once again the distance to this is starting to get we're about 40 odd pips away from it. Yep. So I've got a 154.19 is a possibility, so any breakdown this trend line that I've drawn on here could see us running towards that. Otherwise I've just got to look towards the way the trend is taking us at the moment and look at yesterday's highs and maybe beyond. But yesterday was really helped by the UK jobs report earlier on, which is very positive, but then later on we saw some further gains, but it's continued since then. So upside targets yesterday's highs, as I said, and possibly the daily R1 there. If we start pushing up to the downside, well, as I said, we've got that target of 154.19. Right, looking then at the dollar yen. Dollar yen's sitting, still very range bound in another, like most of last month, it's sitting one bar up, one bar down. It's almost getting back into the same situation here. It's pushing up a little, or tried pushing up again this morning after gaining yesterday against the dollar. That is hence going downward. Any sort of weakness may see us pushing back towards the highs of yesterday. I'm just looking at there's probably a more solid trend line here now. If we do start seeing a sell-off, I'll just look at this trend line, look for the break of this trend line, and go with that side. We've got this sort of bigger trend line also sitting there on the daily, so there's a couple of trend lines to be watching and breaking for a bigger swing to the downside there. Short term though, it remains quite a difficult currency to trade. We get a lot of whip, as you can see in this yesterday's candles, lots of inside bars, and I've been really standing away from it at the moment until we sort of get into any sort of trend, because it's just, your chances are that you're just going to get whipped. We have got a slight upside target of 118.91, I think it is. Yep, around 91.92 area. So there is a slight upside target there which could be hit. It's just finding resistance at the 34 moving average at the moment. Okay, let's just move on. And finally, let's look at the Aussie dollar. The Aussie dollar started picking up again yesterday, but then it's another one of those currencies. It remains relatively weak from a fundamental point of view, and when you see this sort of continuation to the upside, I mean, I think we were short on it for most of yesterday, or a lot of members of the room were short on it yesterday for quite some time. Did again, we felt the effect of the US data and managed to rally, but I'm always looking at this thinking, well, if it breaks this trend line sitting here, we could easily see some further downside, and it could be quite quick. Looking at the 60-minute, and again I'll draw on another this sort of trend line here. So it's in a sort of a rising, there is a rising channel sitting across all of this somewhere. It's a very faint rising channel, but well, I'll be looking at the highs there in terms of possible resistance, although not selling into them, but just watching it more so. More likely, if we get any longs and anything going, I'd be looking at that as targets. For the downside, well, a break of these lows here could see us coming back down towards the earlier part of the week, the lows that we experienced in the earlier parts of the week there. But it certainly isn't really a very clear pattern at the moment. Again, it's got into a bit of chop. News-wise today, we've got not a great deal of numbers coming out today of significance. There's lots of little numbers coming out, or less significant numbers in terms of their effect on the market. Really, US figures we've got coming out at 1:30. We've got the unemployment claims. I'm just looking to see, which is just a weekly figure, but in the current market may just see a bigger reaction to that. We've got the Philly Fed Manufacturing Index at 3 o'clock, but as I say, there's not a lot of sort of significant data coming out until that point. So yeah, could be quite a quiet one on the fundamentals. Of course, we could have comments coming out on Greece at any stage as we look towards yesterday's sort of deadline. It now seems to be sitting there. Right, have a great one. Bye for now.